Good morning. Welcome to Stock Market Today. It's Wednesday, October 7th, 2020, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. Also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities finished down yesterday near the worst levels of the day. Market dropping sharply after President Trump said he will no longer negotiate on coronavirus stimulus until after the election. Most sectors were lower, with comm services, tech, and discretionary faring the worst. Utilities, only sector to finish higher on the day. Treasuries were mostly stronger after yields moved higher on Monday. Dollar was higher on the euro and sterling crosses, but weaker against the yen. Gold down 60 basis points on the day, and crude oil settled up 3.7%. So headlines are going to be a fact of life. For us, I've always kind of considered stimulus ahead of the election as a potential positive surprise, but not the base case. So in my mind, nothing's changed, and we'll take a look at the charts in a little while. As we get to the desk this morning, futures rebounding a bit as the president, after the market closed, kind of walked back some of his comments. S&P futures up about 60 basis points after Asian markets were mostly higher overnight. China does remain closed for the Golden Week holiday. European markets are little changed. Treasuries are mostly weaker with the curve steepening. Dollar stronger against the yen, weaker on the euro and sterling crosses. Gold is down 90 basis points. WTI crude off 2.3% after gaining 3.5% yesterday. So let's look at the structure of the market. And it was a late day tweet with the majors at the top of recent ranges. That's kind of how I view it. You can identify the tweet as the catalyst for the market to trade lower, but let's not lose sight of the fact that SPY, Qs, and IWM were all trading at the top of recent ranges. So what I see is pretty amazing in that since the close on Thursday, we have had a ton of headlines that really could drive the market lower, or in theory should have driven the market lower. President tests positive for COVID. President goes into the hospital. President comes out of the hospital and immediately calls off stimulus talks. And through all that, we're only down on the S&P about 1% from the close last Thursday. So to me, what I see is range trade, a lot of opportunity to get chopped up. But realistically, zooming out and understanding your levels and your time frame from an intermediate term trend perspective, support 320 to 325 for SPY with resistance at 343. Qs, it's choppy between 265 and 280, right? Until we get a decisive break one way or the other. And IWM is stuck between 145 and 160. So I think it's really important here. Headlines, tweets, not being reactionary. Knowing what your roadmap looks like, knowing what the game plan looks like, knowing what these key levels are, and then kind of responding appropriately, not reacting, responding appropriately based on your playbook. These are some levels that make a lot of sense to me. Depending on your time frame, your levels may be different, but know your levels and know your time frame here and now, and especially leading up to the election. Let's talk about our market in a minute. What are we writing about today? Well, stocks sell off on the heels of a late day tweet. That's well documented. We're not going to pound the table here on that any further. Stimulus, in my mind, as I said, has always been a matter of when, not if. I've always kind of viewed the potential for stimulus ahead of the election as a positive surprise, but not the base case. So realistically, and the charts bear it out, nothing's changed. What's interesting to me is that growth leadership looks to be moving down market cap. We'll take a look at that a little bit later on. Sentiment roughly unchanged on the week, and futures, as I said, do point to a higher open here today. Now, if we look at the major indices from a power bar perspective, again, not a ton has changed. We do need to update this slide and take a look at that because markets were lower yesterday. So I apologize for that. We'll get to that in a little while. But realistically, as I said, not a ton has changed here from the perspective of the major market trend, right? Let's take a look at kind of what's going on in the equity market. We had some markets actually trading near all-time highs yesterday ahead of the tweet. We'll talk about that a little bit later on. One in particular was this small cap growth theme. I'm going to pop this in here. I apologize for this. So let's take a look at those power bars now, right? Not a ton has changed here. A little bit of deterioration with the major markets all down over 1%. NASDAQ took the brunt of it. Small caps outperform. Flight to safety sends bonds higher. So According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets are mixed, right? We have the Dow negative, but really not a ton has changed. And that's interesting to me, right? And just looking at the fact that SPY is only down about 1% since the close on Thursday kind of speaks to that, right? So it's easy to get chopped up. It's easy to react to the headlines. Makes sense not to do that. It makes sense to look for opportunities, though, in certain areas of the market. Now, remember we talked earlier this week about the fact that select growth themes were overbought, but the cyclical part of the ideas that we like had become oversold. In particular, materials are near an oversold level. Industrials are just rounding out of an oversold level. That's based on our overbought, oversold indicator. But take a look at a name like International Paper, right? It has a bullish rating, strong trend, strong industry group as it consolidates here, a little rounding bottom, breakout and consolidation. What I see is a recent shift in the relative strength, right? What we call a personality change, go from being a big underperformer to now starting to outperform in the September timeframe and continuing into October. It's oversold with the indicator beginning to round higher while Chaikin money flow is bullish. Looks to me like you have some solid support in the $36 to $38 range. So to me, if you're looking for ideas in this space or, just ideas in the market, I think that, a name like International Paper looks pretty compelling. Trading just above near-term support levels and oversold within the context of an emerging uptrend. So take a look at a name like IP here today if you are looking for ideas, or at the very least add it to a bullish watch list. Let's take a look at our sector tracker now, movement of the last 5 days. Defensives at the top, right? We talked about this yesterday. Not much has changed, again, in the structure. Utility is the only group to finish higher, so they continue to push on the top of the list. REITs as well, and then you have financials. Financials obviously benefiting from a steepening yield curve. Utilities and real estate. The conversation I'm having with myself is this defensive positioning, or is it the fact that treasuries are yielding so little that investors are moving out and potentially looking at these as a replacement for treasuries within their portfolios? I don't know the answer, right? We're just some things to keep in mind as we watch these trends develop. Staples, discretionary, healthcare, and materials are middle of the road. Industrials higher, but towards the bottom. Tech flat to down slightly, even after getting hit yesterday. Comms and energy at the bottom of the list over the last 5 days. And you kind of know my views on energy. They've been pretty well documented here and in my writing. So I'm not going to belabor that point any further, other than to say I welcome the chance to change my view, but it's not there yet, so I'm not going to. If I was going to change my view anywhere, it would largely be in the financials, which look to be stabilizing on a relative basis. We touched on that in yesterday's show. Take a look at the home builders now, our industry in focus. Past 6 months, monster outperformer, leading the S&P 500 by 57%. Its power bar ratio, future potential, very strong. 22 bullish or very bullish stocks for only 2 bearish stocks, currently ranked number 3 of 21 subsectors, having moved down 1 slot over the past week. Some names there to take a look at: M&I Homes, MHO, TriPoint, TPH, and MDC Holdings, MDC, all with very bullish Chaikin Power Gauge ratings, and our holdings in a fund that realistically traded at a new high yesterday. Take a look at XHB, very bullish ETF rating, and a strong trend above that rising long-term trend line, solidly outperforming as it has been since the May-June timeframe. Money flow bullish. Again, I mean, traded at a high yesterday before closing, down near the low of the day, obviously, following that tweet, entire market sold off. I mean, just look, consolidation, attempted a breakout. So we'll see if we can rebound here, but you got a solid consolidation zone to shoot against. I think it makes a lot of sense to be drilling down on these 22 bullish names. Only real factor here is, you're probably going to find a lot of names that are overbought, considering the fund is also overbought. So just kind of keep that in mind from a tactical standpoint here in the near term. Looking at what's trending now, yesterday's S&P 500 movers and shakers, gainers and losers. Really not a lot of company-specific news to touch on here. STE announcement that they are buying a company called Key Surgical sent that stock higher by 3.6%. The rest of the leaderboard, quite frankly, nothing company-specific that I could see to drive these stocks all higher by more than 2%. SNA, 2.9%. EIA, right? I didn't really see a ton of company-specific news as I was drilling down on these names. Now, the loser side of the board, Boeing, the call out here as they lowered their 2020 outlook. So some commentary about what their outlook looks like in 2020 and potentially going forward. Lowering the outlook, investors did not like hearing that, down 6.8%. Diamondback, nothing company specific, down 5.3%, 5.4%. KMX, same story, down 4.8%, nothing company specific to drive trading there. Broadly speaking, for coals, it was more a function of the soft lines being weak yesterday, not so much anything to, coal specific in EA. Didn't see any news in EA. Took the stock down 4.5% on the day, right? So, the prospects are there, as we've been writing in our notes for the past few days, really the past week, for trading to remain choppy, right? I think it's going to be a headline / tweet driven market from now until the election and potentially beyond. That's why those levels are so important. That's why focusing on the relative strength is so important, right? Because you can imagine a situation where the market's chopping sideways, but there are pockets of strength from a relative perspective. So I think it makes sense now. Obviously you always want to kind of know what the positioning of the market is and what the trend is for the market, but taking the analysis a step further, as always, and drilling down on the leading groups, leading areas of the market is going to be helpful here, as well as, where the potential shifts are, right? Are things like financials really have caught my attention. It's early, but the diminishing relative weakness and potential basing process that we talked about yesterday really catches my attention. So for those of you who received my morning note, really take a look at yesterday's note as it relates to the fins on a relative basis. Let's go to sentiment now. On Wednesdays, we get a touch base on what's happening from a sentiment perspective. And really not much of a change, right? We take a look at that 13-day moving average of the CBOE put call ratio for equities. I think it's down to spot 5.2 from spot 5.4 last week. So we're still in the greed area, much less greedy than we had been, through August and September that we were talking about. So this kind of chop in the market, the pullback from the recent highs, has worked off some of the excess greed, but we're still, we're more greedy than fearful here. VIX is kind of interesting as it ticked up yesterday. Also want to remember, take a look at the VIX curve, big hump out next month, right, around election uncertainty, and those calculations are making their way into the overall VIX calculation here, and now lending a little bit of an upside bias to what we're seeing in the VIX. Kind of away from that, CNN Fear Greed Index is flat from last week at 44, still in a fear position. From a positioning standpoint, small and large speculators on balance, slightly net long, but nothing to really kind of shake a stick at one way or the other in terms of contrarian thoughts or ideas. So that's what's happening from a sentiment standpoint. Much more detail in my morning note today. What jumped out at me actually was this growth theme apparently shifting down cap, right? So we've seen small caps outperforming. Now, for me, for a long time, it's been large over small, right? I'm open to changing my view when it is appropriate, but also for me, it's been the growth theme, right? We've talked about it for a long time, and it's choppy here in the near term with a slight upside bias, but no two ways about it that it's become choppy. But what's interesting to me is IWO here. This is Russell 2 growth, trading in a new 52-week high yesterday before fading. For those of you who are candlestick aficionados, yes, that could be potentially a shooting star pattern. We'd have to see how today trades, but we're a shooting star candle, if you will, right here. Long upper tail closing near the low of the day. But we are above the 50-day moving average, which is rising. We're above a flattish 200-day moving average, which I'm not in love with. What jumps out at me is on the pullback, we didn't become oversold. And then we have this breakout on a relative basis. Look at IWO relative to SPY, breaking to new highs. So again, I think, the growth theme looks like it could be shifting down cap. And then finally, I wanted to leave you with the base metals because I have been on the inflation kick, but selectively. Precious metals choppy. I think the ag play is the closet play on rising inflation, especially when we do get further stimulus. But the base metals to me speak to the growth theme, and they're under pressure between the moving averages, diminishing momentum as the RSI makes a series of lower highs. And we have a breakdown relative to the broader commodity complex. So that's just something to keep in mind. So that'll wrap us for today. Head over to chaikinanalytics.com/test drive for a free 14-day trial.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.